So let's just touch on why we're seeing a lot of positivity today. Let's just look at Germany as an example. We've actually had those iPhone numbers out in the early parts of the trading session. That creating just a bit of optimism and perhaps counteracting those Spanish bond yields that are breaching once again the 6% level.
Yes, it is, and actually this really tells the story of the tape of basically the two-sided story. Germany is showing some okay numbers, and there are some uncertainty in Spain, despite of the better than expected auction in Spain yesterday. We are seeing the Spanish 10-year yield going to 6%. But on the positive side, and even this positive side, we have to take it with a grain of salt, which is basically the IFO survey, which is the major business sentiment survey from Germany, is showing, I believe it's a 6th consecutive monthly improvement. But it is important to say that all three components of the IFO sentiment survey, the expectations index and the situation index, they're all showing smaller increases or smaller improvements. So this story about the German recovery and the German resilience has to be tested well into the summer.
And of course, joining us now on the desk in Johannesburg is Wayne McCurry from Momentum Asset Management. Wayne, so can we actually say that this is a little bit of positivity? We're getting these good business sentiment numbers out of Germany.
No, very much so. I mean, just a question for Ashraf. I mean, two simplistic questions, in fact. Is Germany okay? In other words, is the economy okay? Will they survive? Will they grow? And then if the answer is yes there, by definition, will the rest of Europe be okay?
Yeah, two very open-ended questions. I think the first question, is Germany okay? It is okay. I mean, even the Financial Times today in the cover, they have a good, interesting story about the miracle, not the miracle, but the miraculous resilience of Germany. Is it okay? It is showing some decent numbers in employment. It is showing some very good numbers in domestic demand in Germany. The issue, well, actually, the advantage for Germany to be in the Eurozone is that it is enjoying low interest rates, even though there are higher yields in other nations. But it is enjoying the advantage of low interest rates and a relatively low currency relative to the competitiveness that is enjoyed in Germany. So that is working well for Germany. However, if you're looking at some things called the ZEW survey or the IFO survey, these are one of the major business sentiment surveys for Germany. Even though they have been improving, there is something, the PMIs, which people know more, which is the Purchasing Managers Index in the US called the ISM. Well, the PMIs for Germany, even though they came out of below 50, below contraction territory, they are coming back down and they are showing a tendency of a double dip. So if we do see an increase, further increase in the unemployment rate in Spain and further declines and in the macroeconomic situation in the Eurozone and the peripherals, that could weigh on Germany, and this second time around might not see Germany being able to take that this summer. So that is, those are the concerns here. I would not say Germany is going to resist the Eurozone until the rest of the year necessarily.
Ashraf, if we could also just touch on what is happening in France. We've got presidential elections on Sunday. Nicolas Sarkozy head-to-head with the likes of course, Francois Hollande. He's a socialist. It seems that he's gaining traction. If we start to see the other powerhouse in the Eurozone moving towards socialist tendencies, what does that then say for all the austerity measures that have been going through in the rest of the Eurozone? And do you think this could be a political standoff that could change the economic scenario in the region?
I think it will be, look, let's talk about the language of the market. If Mr. Hollande wins, will that be enough of a reason for bond traders to send yields higher, French yields higher, based on the expectations and the fear that France is not going to implement the austerity packages and even if he's not going to agree with the compact? Yes, it will be enough of a reason. Will we see a very heavy socialist program program that will, send investors away from France? Probably not. Taking a deeper, I don't think that really France is going to be, like the question that you put it, is going to single-handedly change the economic landscape. If you want some things to change the economic landscape in the Eurozone, there is plenty of them. If Greece with Spain and Portugal interact together with a negative dynamics, that could do that. One thing, when you step back and you look at this picture, what's going on with France, what we may be concerned about is that if France loses Sarkozy, then Mr. Hollande may not be the ally that Germany needs. So Germany will end up by itself. Germany will end up calling for austerity by itself. And Hollande will be probably closer to Monti, to Italy's Monti, and to the southern Europeans as far as their seriousness or lack of regarding austerity. And that might raise those big questions from the bond market.
Okay, so Ashraf, let's then move to, I mean, we know austerity, Spanish bond yields rising. We're worried about France getting a downgrade, but let's move to the US, because we've got that FOMC meeting next week. And this is going to be quite telling with regards to more stimulus or not, or if we're not going to see more stimulus. How important is next week? And are we expecting some kind of indication that the central bank, or rather the Federal Reserve, would be stepping in to assist if needs be?
Looking at the way the markets reacted and showed knee-jerk reaction to the FOMC minutes and to the that basically showed that there may have been more members that were disagreeing with the notion that interest rates have to remain low until 2014, and looking at the reaction of the market to every Bernanke speech, would turn out to be quite bullish. If you need to look at something in the FOMC statement, you have to look at the last statement, the last paragraph, which is if there is any more members dissenting with the notion that interest rates are going to be low until 2014, any more members in addition to Mr. Lacker. Yeah. So Mr. Lacker, he's the lone hawk. And now, if we do not see, and there's probably 70% chance that we're not going to see any more members, and along with more hardening or more, let's say, improvement in the outlook, then that could be quite positive for stocks, and it could be, and it could probably weigh just a little bit on the US dollar, but not to go and to bottle the, the bottle of champagne, because May 6th there is a job report for the US, so we need to look at that too.
May 6th is also Greek elections, actually. So Ashraf, thank you so very much for joining us. Ashraf Laidi, Chief Global Strategist at City Index.